In today's show, Bitcoin sentiment and wild divergence from reality as $53,000 Bitcoin price triggers extreme fear. That's right, Bitcoin has stabilized at around 55K after dropping by 6,000 in a single day, but the crypto market sentiment is still in shock. And as you can see here in the Crypto Greed and Fear Index, we're currently rated at 21 out of 100 in extreme fear. And as Rec Capital shares here, sentiment moves BTC, greed drives price up, fear drives price down. Extreme greed precedes tops. Extreme fear precedes bottoms. Bitcoin probably needs to reach extremely fearful investor sentiment before it finally bottoms and reverses. And as Plan B shares here, Bitcoin RSI 66 and 10% below monthly close, all-time high. Also in today's show, 2 Bitcoin funds launched in Singapore by mass-regulated fund manager. That's right, the 2 new funds are the Fintonia Bitcoin Physical Fund and Fintonia Secured Yield Fund, which are intended to provide simple and secure exposure to BTC for professional investors. Also, this just in, breaking news, El Salvador celebrates Black Friday by buying an additional 100 BTC for a 20% discount. El Salvador now hodls 1,220 BTC, worth roughly $66.3 million, as Nayib Bukele announced here. El Salvador just bought the dip, 100 extra coins acquired with a discount. Let's go. And as Max Kaiser shares here, El Salvador is selling bonds priced in USD to buy Bitcoin. The speculative Bitcoin attack that started with cypherpunks in 2009 jumped to corporations and hedge funds in 2020/2021, has jumped to sovereigns. Game theory will kill the US dollar, and that's a good thing. Also in today's show, Vitalik Buterin proposes call data limit per block to lower the Ethereum gas costs, as he recently shared in the Ethereum Magicians Forum, quoting him here, hence a short-term solution to further cut costs for rollups and to incentivize an ecosystem-wide transition to a rollup-centric Ethereum is desired. And as BitMEX shares here, looks like Ethereum may soon effectively have a 1 megabyte block size limit. This is part of the process to lower the gas costs of data by around 5 times to make the rollups cheaper. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ether, and many of the alts are breaking out back in the green. But where's the Bitcoin price likely to go next? Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium Crypto News Alerts every single day, including weekends, just like this. Today's episode is brought to you by iTrust Capital, the #1 crypto IRA provider in America, which currently has over $3.5 billion in transaction volume. Now, when it comes to trading crypto tax-free, look no further than iTrust. Not only can you trade the top cryptos, including Bitcoin, Ethereum, you can also trade physical gold and silver. And yes, they have military-grade security wallets backed by Coinbase custody with a $320 million insurance policy. And they have a special promo they're running right now, where if you sign up today using my referral link in the description right down below, you're going to receive $100 as a funding reward in BTC, absolutely free, truly making this a no-brainer. Also like to point out that there are no setup fees as well as no monthly fees. So go ahead and click my referral link in the description right down below. Set up your tax-free crypto IRA account today and claim your $100 in free BTC, and let's start stacking those sats tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Holla at your boy in the live chat. Now, Bitcoin has stabilized at around 55K after dropping by 6,000 in a single day, but the crypto market sentiment is still in shock. And according to the Crypto Greed and Fear Index, as of today, November 27th, emotions are now at the most fearful since late September. As you can see here, we're currently rated a 21 out of 100 in extreme fear. Yesterday was a 47 neutral, last week a 43 in fear, and last month a 66 in greed. Now, Friday took a toll on this metric, with the score more than halving in 24 hours from its previous position of 47. Those 2 readings correspond to sentiment going from neutral to extreme fear and missing out the fear zone altogether. While an expected reaction, the upheaval apparent, the emotional state of the market participants is becoming a source of amusement for some familiar names. Investor and entrepreneur Alistair noted that extreme fear is hardly an appropriate reaction to Bitcoin trading at 54,000. Indeed, the last time the Bitcoin spot price was at those levels in mid-October, the feed and Greer measured a 78 out of 100 in extreme greed. As he shares here on crypto Twitter, this much fear and we are at $54,000. Wild. And on September 30th, when the index last hit a 21 out of 100, Bitcoin traded at around $43,800 on Bitstamp. And right here, you're looking at the Bitcoin one-day candle chart. Now, funding rates see overnight reset. That's right, the latest and deepest phase of the Bitcoin price correction came as trader habits on exchanges stayed curiously optimistic. The funding rates being positive despite Friday's move showed that market expectations were for a swift recovery, and at this time on Saturday, it seems that the trip to the lows of 53,500 was enough to reset the mood. Funding rates are now back to normal and show no bullish bias, as you can see here in the Bitcoin funding rates chart, brought to you by CoinGlass. And as noted by analytics firm Delphi Digital this week, however, funding remains lower relative to the first half of 2021, and this may signal a lack of overall direction. Quoting them here, funding rates continue to be low on the futures markets. This could be a sign that the shorter-term leverage traders are still undecided directionally, and looking back at the start of the year, the bullish run-up has been accompanied by a significantly higher funding rate, and metaverse tokens have been top performers in the NFT sector ever since the announcement of Facebook rebranding into Meta. And while investor mindshare with metaverse tokens is at an all-time high, competition between the two biggest metaverse tokens by market cap heats up. And checking out the top metaverse tokens by market cap, we have Decentraland number one leading the pack with an $8.5 billion market cap, followed by Axie Infinity with just under an $8 billion market cap. And looking at the total metaverse market cap, it's currently sitting just under $52 billion with just under $12 billion in trading volume in the past 24 hours. And checking out the latest from crypto analyst Rec Capital, Extreme Fear has appeared for the first time on this retrace, and Extreme Fear precedes financial opportunity. And he also shares Bitcoin needed to break down from the wedging structure in order for Extreme Fear to appear for the first time on this retrace. Bitcoin has confirmed the breakdown with a daily close below the structure, possibly flipping the pattern bottom into resistance now. So there you have it. And checking out the latest from Plan B, creator of the Bitcoin stock to flow model, he updated us this morning. RSI 66 and 10% below monthly close, all-time high. And before I break down our next story of the day, 2 Bitcoin funds launched in Singapore by mass regulated fund manager, as well as El Salvador celebrates Black Friday by buying an additional 100 BTC for a 20% discount, as well as Vitalik Buterin proposes call data limit per block to lower the Ethereum gas costs. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin and many of the alts are currently breaking out back in the green, with Bitcoin up about 1% for the day, stabilized at around that $55,000 mark. We have Ethereum up 1.4%, trading just above $4,100. Solana up 1.6%, trading just under $200. Binance Coin up 3%, trading at $609. Cardano up 0.3%, trading at $1.56, while CRO is up 12.5%, trading at 77.6 cents. But all right, now let's break down our next story of the day. Fintonia Group, a Singapore-based fund manager regulated by the Monetary Authority of Singapore, has launched 2 institutional-grade Bitcoin funds. The new funds, the Fintonia Bitcoin Physical Fund and the Fintonia Secured Yield Fund, are intended to provide simple and secure exposure to BTC for professional investors. Fintonia announced on Thursday, sharing the following: the funds are live and investors can subscribe and redeem regularly as they are open-ended funds similar to a mutual fund. The funds are only available for accredited investors. The Fintonia Bitcoin Physical Fund targets institutional investors seeking direct exposure in the king of all crypto, allowing them to buy, store, and sell large amounts of Bitcoin. The fund acquires physical Bitcoin, meaning we will all buy the actual Bitcoin rather than a derivative instrument on Bitcoin. United States, please take note. Where is our Bitcoin spot ETF in the US? When's it coming? Holla at your boy. The Fintonia Secured Yield Fund, on the other hand, provides investors with access to private loans secured by Bitcoin. Bitcoin is an excellent form of collateral for loans. It trades 24/7 and is highly liquid with approximately $30 billion to $60 billion per day. If required, it can be quickly liquidated in comparison with, for example, commodities and real assets. Now, both funds rely on third-party, licensed custodians storing client cryptocurrencies on cold wallets. Investments are also insured against theft and hacking, the company said. Fintonia aims to reduce crypto to fiat friction as the mass regulated fund manager that complies with Know Your Customer and anti-money laundering requirements. These open-ended funds provide professional investors with a recognized legal and regulatory structure similar to that of a typical mutual fund, the announcement reads. Now, Fintonia Group is a regulated financial services firm founded back in 2014 with a focus on fintech. He said that Fintonia has been involved in crypto since the early days and now specifically focuses on cryptocurrency as it has evolved into a separate asset class. Now, this news further reaffirms Singapore's commitment to become a central global cryptocurrency hub, as local regulators have issued multiple licenses to legalize crypto trading in the country. And according to the Mass Managing Director, Ravi Menon, Singapore is developing very strong regulation to strengthen its position as the world's crypto center. And speaking about worldwide crypto centers, they say El Salvador to become the next Singapore of Latin America. And before I break down our next story of the day, El Salvador celebrates Black Friday by buying 100 BTC with a 20% discount, as well as Vitalik Buterin proposing call data limit per block to lower the Ethereum gas cost. But let's first take a quick look at the overall crypto market cap, sitting just under $2.5 trillion with just under 130 billion in volume in the past 24 hours. Current Bitcoin dominance is 41.6%, with the Ether dominance at 19.7%. And checking out the top gainers within the top 100, we have Anchor leading the pack, up 24% for the day, trading just above 18 cents, followed by Live Peer up almost 19%, trading above 64 bucks, and the Graph up 17%, trading at $1.04. Now, which altcoins are you currently most bullish on during Q4 of this bull run? Let me know in the comments right down below. We already checked out the Crypto Greed and Fear Index, so now let's break down our next story of the day. Salvadoran President Nayib Bukele, shout out to Nayib, bought the dip once again, investing more than $5 million into BTC as the price dropped under 54,000 on Friday. And in the Friday tweet, El Salvador's president said he had purchased 100 Bitcoin following a global market sell-off in response to a new COVID variant discovered in South Africa, according to data from Cointelegraph Markets Pro. Since reaching an all-time high price of 69,000 back on November 10th, Bitcoin has fallen more than 20%, almost 25%, to reach 54,000 at this time, which is an 8% drop in less than 24 hours. And checking out his tweet here, El Salvador just bought the dip, 100 extra coins acquired with a discount. And we have the infamous Bitcoin troll, Peter Schiff, responding, "That's unfortunate for the people of El Salvador. I wonder how many more dips they will buy before they cut their losses and sell. Wah, go cry me a river." Peter Schiff. Now, Bukele first announced El Salvador would be making a major Bitcoin purchase on the eve of the country's Bitcoin law going into effect on September 7th, buying 200 BTC when the price was roughly $52,000. And he has tweeted each time that the government purchased coins during a price dip like a boss. And with the country holding 1,120 BTC before the latest buy, so with the addition of 100 coins on November 26th, El Salvador now holds Bitcoin worth roughly $66.3 million at the time of this recording. Pretty sweet, right? And since first announcing legislation aimed at making Bitcoin legal tender in El Salvador back in June, Bukele has proposed several initiatives in the country around adoption and mining. The government has started construction of the infrastructure to support the state-issued Bitcoin wallet Shivo, and recently unveiled plans to launch its own Bitcoin city at the base of the volcano, funded initially by $1 billion in Bitcoin bonds. And as Max Kaiser shares here, El Salvador is selling bonds priced in USD to buy Bitcoin. The speculative Bitcoin attack that started with cypherpunks in 2009, jumped to corporations and hedge funds in 2020, 2021, has jumped to sovereigns. Game theory will kill the US dollar, and that's a good thing. And Max Kaiser also says that $220,000 in 2021 is still in play. Let me know if you agree with the hosts of the Orange Pill Pod and Kaiser Report. And before I break down our final story of the day, Vitalik Buterin proposes call data limit per block to lower the Ethereum gas cost. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 990 plus videos right here on my YouTube channel. Also some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button and ring that bell to help me get to 100,000 subs and to receive daily premium crypto news alerts every single day, just like this. And if you're currently listening on Spotify, iTunes, or Google Play, or any of the podcasts where we're currently receiving over 20,000 downloads per day, I invite you to come visit the YouTube channel at cryptonewsalerts.net, as this is a premium show and you can watch the video along with the audio. Now, you can also follow me on crypto Twitter, of course. My Twitter handle is cryptonewsyes, and I'm also on TikTok, Telegram, and Facebook, so be sure to follow me there. But all right, now let's break down our final story of the day. Ethereum co-founder Vitalik Buterin has proposed a new limit on the total transaction call data and a block to decrease the overall transaction call data gas costs over the Ethereum network. Buterin's post on the Ethereum Magicians Forum, EIP 4488, highlights concerns regarding high transaction fees on Layer 1 blockchains for for rollups and the considerable amount of time to implement and deploy data sharding, as he shares here, hence a short-term solution to further cut costs for rollups and to incentivize an ecosystem-wide transition to a rollup-centric Ethereum is desired. And while the entrepreneur cited an alternative wherein the gas cost parameters could be decreased without further adding a limit to the block size, he foresees a security concern in decreasing the call data gas cost from 16 to 3, as he shares here. This would increase the maximum block size to 10 M bytes and push the Ethereum peer-to-peer networking layer to unprecedented levels of strain and risk, breaking the network. Now, Buterin issued a decreased cost to cap proposal, which aims to achieve the goal of reducing unprecedented levels of strain and risk breaking the network, and believes that 1.5 megabytes will be sufficient while preventing most of the security risks. And as advice to the Ethereum community, he shared the following: it's worth rethinking the historical opposition to multidimensional resource limits and considering them as a pragmatic way to simultaneously achieve moderate scalability gains while retaining security. And if accepted, the implementation of the proposal will require a scheduled network upgrade, resulting in a backward incompatible gas repricing for the Ethereum ecosystem. This upgrade will also mean that miners will have to comply with the new rule that prevents the addition of new transactions into a block when the total call data size reaches the maximum. Now, a worst case scenario would be a theoretical long run maximum of about 1.2 million bytes per 12-second slot, or 3 terabytes per year, the proposal read. However, the community is discussing other options like the implementation of a soft limit. Others raise concerns about the congestion during NFT sales, which may require users to compensate for the lack of execution gas by paying a higher total fee. Rising gas fees have resulted in an outflow of users from the Ethereum network to lower cost Ethereum virtual machine compatible networks. And as reported on November 4th, Etherscan data shows that approving a token to be transacted on the Uniswap decentralized finance protocol can cost as much as $50 worth in ETH. However, I've seen gas fees as high as $350, even if you're going to send $5. So the gas fees are absolutely outrageous and they need a solution and fast. Now, additionally, layer 2 solutions, which were billed as the protocols that would help solve the fee issue, have been charging higher fees due to network congestion amid the onboarding of new users, as pointed out right here. Isn't Arbitrum supposed to be cheap? What a joke. It shows you the transaction fee, $31.16. Now, shout out to Matic, a layer 2 scaling solution for the Ethereum blockchain. Now, for a quick recap of what I covered with you here in today's show: Bitcoin sentiment and wild divergence from reality as $53,000 Bitcoin price triggers extreme fear. Also, in today's show, I shared that 2 Bitcoin funds just launched in Singapore by a mass regulated fund manager, as well as breaking news: El Salvador celebrates Black Friday by buying an additional 100 BTC at a 20% discount. And also in today's show, we discussed Vitalik Buterin proposing call data limit per block to lower the Ethereum gas cost. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. David Knowles wrote, "Hi JV, great show as always, mate. You have the respect of your subs, that's for sure. You report the news, it's always balanced, unlike the media here in the UK. And you haven't been drawn into insane predictions. You allow your subs to make up their own minds and don't influence. Keep it up, mate. Total respect from the UK. Much love and respect, David. I greatly appreciate your continued support." Now for our next feature comment of the day comes from Ellen, who wrote, "Thanks for the great show, JV. You're the best." You're very welcome, Ellen. Thanks for being a long-term subscriber of the show. Now for our third and final feature comment of the day comes from Michael Broderick, who wrote, "Hey, you made it to 50,000 subs. Congrats and a belated happy Thanksgiving. Thanks so much, fam. Greatly appreciated. And cheers to the next 50,000 subs and a $100,000 Bitcoin price. And to be featured on tomorrow's episode, drop me a comment right down below." Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. That's right, Bitcoin is the glitch in the matrix. And if you gain value out of today's show, be sure to smash that subscribe button and ring that bell to turn on all notifications and help me get to 100,000 subs. And real quick before I go, I want to give a quick shout out to iTrust Capital, the world's largest crypto IRA platform with over $3.5 billion in transactions when it comes to trading crypto tax-free. Look no further than iTrust. And they have a special promo running right now where if you sign up today, you're going to receive a $100 funding reward in free BTC. Here's how it works. Use my referral link in the description. Go ahead and register, then confirm your email. It's that simple. Also like to point out that there are no setup fees and no monthly fees, truly making this a no-brainer. So go ahead and register right now, claim your $100 in free BTC, and let's start stacking those sats tax-free. And I look forward to seeing you in tomorrow's episode. Peace.